Hello and welcome to the second part of this video, in which we'll be discussing the market update and the various factors. So starting with the world economy, we saw that the US market was almost flat with Dow Jones negative by 2%, S&P 500 close to almost flat. Nasdaq was up by 1.4%. The European market was down; it corrected about 1%. The Asian market was a mixed bag. Gift Nifty was positive by 2.13%. Nikkei Japanese market was down by 0.3%. Hang Seng was down by 4.8%. The other markets were relatively down by 1 to 2%. Now we move to the weekly performance of the Indian market. If you look at the Sensex and the Nifty, they were up by 1.9 to 2%. Nifty Bank was up by 1.6%. Nifty Midcap was up by 1%. In the last week there was a major inflow from the FIS, which after a long period have turned positive, which has caused the market, the broader index of in the Indian market to be positive. But however, when we look at the Nifty Small Cap 100, it was down by close to 0.7%. Now we'll move to the PE valuation. If you look at the Nifty 50 trailing PE, it reached 21.9, which is just above the 2 years average and below the 5 years average. Nifty Midcap 150 trailing PE is at 37.3, close to 2 years and 5 years high, which is still a very high zone. Nifty Small Cap 100 trailing PE is at 26.5, above 2 years average and below 5 years average. If we look at the Buffett indicator, which is the ratio of total market cap to the GDP, we see that the Indian market are modestly overvalued as of now. Now we move to the Indian bonds. The Indian 10-year government bond were trading at 6.998% yield. The yield curves in the short term and the long term are inverted again after being in the flat zone for about 2 months, whereas the midterm yields are still flat. Now we move to the candle charts. On daily, Nifty 50 has finally broken its 22,800 level and has moved out of the channel, in which with a very bullish candle on Thursday. However, it found a resistance at 23,000 level on Friday, forming a shooting star on the daily basis. So this 23,000 also coincides with the Fibonacci pivot R2 level, which is at 23,000. This level might indicate a very strong resistance for the Nifty 50. However, if we look at the Nifty on the weekly basis, Nifty has formed a very strong bullish back-to-back strong bullish candles, indicating that there could be a further move. So as of now on the Nifty charts, the trend does show that it's moving in an upward channel, but there might be some but the indications are not that strong to predict anything on the further movement. The next week would definitely give us more sense on how the Nifty 50 would move. On the mid-cap side, Nifty mid-cap has continued to be in the uptrend from the last few weeks, and it did reach its another high, but it did not make any strong candles, any solid strong candle, which might indicate that which might be an indication that it might be exhausting. On the weekly chart, it shows a weak strong candle. Small green candle, so a definite pattern cannot be said on the Nifty chart. Whereas if we look at the Nifty small cap, if we see that the 17,000 level seems to be a very strong resistance, which the Nifty small caps unable to cross, and might consolidate around this level for more sections. So that was all from my side. Hope you like the video. Do share, subscribe, and follow for more weekly updates from my side. Thank you.